You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody. That rocking tune means it's time to rock out for another week here on the Options Insider Radio Network. And as always, we kick off this rockin' party with the Option Block every Monday, 12 p.m. Central, 1 p.m. Eastern. So wherever you are listening to this live after the fact, hope you're liking it. If you like what you hear, make sure you leave a review on your platform of choice so that folks can continue to discover this program in these turbulent times. And also, send in those questions, those comments. We do love to hear from you across the broad globe, not just here in the U.S. We love the U.S. folks too, but if you're international, have a lot of international flair on the show, hit us up with your questions, your comments about the world of options as well. We do love to hear from all of you, near and far. My name, of course, Mark Longo from the aforementioned network, as well as from the OptionsInsider.com. It's a place you can go in between shows to get all sorts of good stuff, not just our earnings move results reports, but those are there. A lot of great write-ups from the market, most actives, all that kind of good stuff, historical articles, you name it. It's all there. The OptionsInsider.com is the place to go. Now let's go around the horn, see who's joining me on this fine program today. First, let's go out to the sleepiest of provincial parts of these here United States, a place where there never is any social unrest because there really isn't any society. Yes, I'm talking about the hinterlands of Maine, where we are joined once again by the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmeline Capital. Mr. G, welcome back to the program. How goes the endless battle against the newly rechristened clam privateers, sir?
Well, there is no society. I thought that was quite funny, actually.
I have my moments once or twice.
Yes, quite funny. I did post some pictures of the privateers on Friday. As of now, they are not here because they would be over their head in water. So they are counting their loot and distributing it forthwith. So things are good in Maine, although our governor seems to be continuing to lock down the summer. And apparently, I think we have the least amount of cases of any state by far, actually. So she doesn't quite understand that the summertime is when a lot of Mainers actually make any money because that's when all the tourists come. So anyway, we'll see how it all goes. But right now, Maine is kind of limping along, I would say. Limping along.
Well, you're in that weird situation where there's no one really there to begin with, so your cases should be low. But then, of course, your governor could misconstrue that as saying, our stay-at-home is working, so let's keep it working. And so let's keep the few people we have isolated. I think you should get yourself a nice cutlass and a fancy hat and go down there, march on down to the shore, and demand your chunk of the clam privateer goodness down there. Let's see if they cut you in on a piece of the action as we turn our attention. Now, maybe there's some river pirates. I don't think there's any clam pirates his way. We're heading out to St. Charles, where we are joined once again by the unclest of Mikes, Mr. Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. How goes your battle against the river pirates on the Fox River these days, sir?
No river pirates to deal with. And protests we had in St. Charles this weekend were peaceful, so very thankful for that. And but I will say this was the first weekend of the year that the Fox River was open to boaters. I mean, like maybe if you wanted to count maybe in March on a couple nice days, maybe. But it was good to be out there this weekend and didn't run into any pirates. But if I did, I'd be ready for them.
He's always ready for a little bit of piracy and a little bit of the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show where we break down what the heck is trading out there. It's kind of a bit of a broken record now. Day that ends in Y means we're in the green. And that's exactly what we're seeing to kick off our broadcast week and kick off the trading week here. The S&P up about 0.5%. The NASDAQ, a laggard actually, up about 1/3%. The Dow leading the charge. A bit of a reversal of fortune out here. Usually tech of late has been leading the charge. The upside today, it's old school, old world economy, a.k.a. the Dow, up almost 1% on the day. So we got Japan officially in a recession. A bunch of other issues, as we've said before, lots of the U.S. in turmoil. But the market, rally-ho yet again. Crude taking a rare break these days, but on rally-ho mode itself as well. WTI still north of that 38 handle, about 38. And the third gold also up, moving up with the market out there today. Yet another strange day out there in VIX land. Also an interesting day out there in volatility land. Our old friend VIX Cash, almost exactly where it was at the end of our last show on Thursday, listeners. We finished that show about 25.25, and it was that coming into showtime. It's drifted up a little bit now. It's closing in on 25.5, so almost up a quarter. We're going to put it in the pretty much unched category for the last few days. So vol remaining were pretty much where it was from our last show. VVIX, a.k.a. the vol of vol, also ticking up a wee bit as well. Up not quite a full point, though, so almost pretty much unched as well. Right about 109, a little bit north of 109 right now. And our old friend VXX also ticking up a little bit to 29.5. That puts it up a little bit from last show as well, but not a ton. So, yeah, interesting stuff out here in good old markets land. Let's kick things off. Let's go the way we went yet again. Let's start in the land of Volman, a.k.a. Maine, a.k.a. the little stick figure who really desperately wants a cool pirate hat. Mr. Rock Lobster, what's lighting up in the land of Volman today, sir?
Interesting you should mention it. Oh, my God, it was almost 25 exactly at showtime. I had no idea that I was so close.
You're still right. You're still right. Look at you just basking in the glow of your victory. So you got to show up to claim your victories. Otherwise, the meatball's going to do it for you, sir.
I know. I'll do vol views. I'm doing vol views. So he took my win and he rode it on a steed into the studio.
You know what he does? He checks the predictions before the show. Oh, you're close. Okay, I'm doing it this week. That's what he does.
He rode that like a winged horse to victory. But he has been doing pretty well on our Vol Edge newsletter. So I can't. He's been right when it counts. So as far as vol, I would say VIX is pretty much up, like a weekend effect. It was a little stiffer this morning, and starting to come back. Vol futures up a little bit. Just, hey, the SPX only rallied 1,000 points in 2 months or something. So, and Friday's move was huge. So very hard for vol to come down when when realized vol is higher. We've said this on the show over and over again. When everybody's trying to read the tea leaves on this stuff, I just think there's just not a lot of liquidity, and for whatever reason, obviously Friday, the economy not doing as bad, or at least, kind of bouncing, after they pumped all that money into it, and people maybe are starting to go back to work, it appears. So those are all positive things. And like the market's already there. It's sort of back to, hey, everything's cool. Not all-time highs. I mean, heck, we still got a bunch of people out of work and nobody knows what's going on, but certainly bounce like a rubber biscuit. And, with the unrest, maybe the market sees the unrest as, okay, maybe something will get done. Maybe there might be a change in police tech. Who knows? Like all these things kind of filter in to vol. Hopefully it will all be for the good. But as of right now, vol is still, from an actual SPX point of view, it's hard to justify where VIX is. I still believe that there's a lot of basically sort of like backspread type of trading. Like that 1 month out vol is still bid. People are buying puts and being long. So I think that's like, when VIX is up, demand is up. So there's still put buyers. This 25 level, we have not gotten out of zone 4 for any length of time. I don't even think we ticked 23 last week. I don't believe so. Maybe for a brief moment in time. But we're still in the danger zone. Hard to believe, but we still are. Actually, not to believe with this worldwide pandemic. Yeah, we broke below 24 for a brief moment, probably on the open on Friday, and then when everything kept going straight up, vol could not come back down again. So I think what you're seeing is the vol market is looking what's going on in a month from now, and everybody trading stocks is saying, okay, wow, the worst is over, we're buying them. So, with volatility, there could be a time disconnect. That's part of the whole thing with vol. So, momentum people are jumping on, the airlines and banks and all this kind of stuff because they're still actually quite off their highs. The reality is. Besides the Q stocks that have really held up the S&P 500, like all the big names, there's a lot of room for the rest of the market to kind of, to go up. Just look at banks. Look at anything remotely Main Street related that's not technology. So I think this level in VIX is kind of hard for us to go through until we're getting a little bit more information. So by now, I think from now, like 25 to 20 feels like it's going to be a little slow. Anyway, that's my thought, and I ain't changing it.
You're obstinate there, set in your ways, diehard old school, cynical Mainer / New Englander that you have become, sir. Let's move out to a little bit more optimistic hamlet known as St. Charles. I happen to know for a fact from a little birdie, Uncle Mike has been supporting his local endeavors, including Skippy's Gyros and Lemonade. Glad to see that they are still a going concern. Uncle Mike, sir, what is lighting up your tape out there in the ever-happy St. Charles?
Well, I spoke with one of my representatives from Skippy's Gyros recently, and he said everything is going strong, so you'll be happy to know that.
Oh, good. And also, are they going to cut me my check soon for the years of endless advertising that I've given to them?
I don't, I'd be curious. So for anyone out there listening that has gone to Skippy's Gyros because of this show, send us an email or email me and let me know, just out of curiosity, because we'd definitely like to know that. But,
I know our reach is broad and vast. I don't know how geographically centered it is to the St. Charles area. I'll have to find that out.
For sure. But anyway, so today is, I think, a really important day for the market in that we're not positive on the year yet. We're about as close as we can possibly be without being positive, but we have not gone positive. So with my strategy, I'm still 95% cash with my aggressive trades. And so I think that rules are rules. And so I'm going to continue to do that. But With that, I am set up to where I have some gamma in the trade, to where in the 5% I am working right now, to where if this market does go positive, gamma will help. But I think that I don't consider the market strong until we're positive on the year. And so we're about as strong as we can be without being strong, no denial. But I'm still holding to my rules as an aggressive trader and thinking I should stay out for the time being, or stay mostly out for the time being. Some other things that I'm definitely watching. Silver pulled back a little bit on Friday, but it's recovering a little bit of that today. So for all of my silver bulls out there, that's always a good thing. I just thought of something. Maybe that can be like an option block version of a Christmas song. Instead of silver bells, we can have silver bulls. Anyway, so that's one thing of note. The other thing is big news coming out of Minneapolis is that they're looking to possibly disband a police department. I'm not sure exactly what that would mean, but if something like that were to happen, that would definitely be life-changing as we know it. Throughout the country. So that's something with which we need to keep an eye on the markets as well. In terms of the COVID update, cities and towns are definitely reopening more and more, and it is good to be out of the house. But we still need to make sure that we're continuing to stay careful because this disease is very real, folks. So a lot going on, but for the time being, I'm just kind of chomping at the bit here because I would love to see a close above or a close on the S&P 500 or SPY, whichever one you follow, to be positive on the year. That's what I'm looking at for today, hopefully.
And what I am looking at is the Skippy Zeros website, which disturbs me to no end. They don't say Skippy Zeros and lemonade. It's the combo of the lemonade that makes it truly stand out. SkippyZeros.net. If you are so inclined for yourselves out there. Listen, tell them we sent you. They owe me a check for about, 5+ years of free plugs here on the network. Let's see what else is lighting it up out there. This stuff ain't free, though. You guys are buying it with your hard-earned money. Let's see what you're putting that money towards these days. Let's start in index land. VIX, as of a few minutes ago, not exactly blowing the doors off, at about 130,000 contracts. The ADV are at about 360 out there right now. So given the fact that under normal circumstances, this would be beginning of summer and things would be pretty light, that would be decent. The fact that we are in these weird, can't really say post-pandemic because we don't really have a treatment, but it seems like we are the way the economy is reacting out here. So 360 perhaps seasonally adjusted, not so bad out there. SPY, about 2.25 million contracts on the tape. The ADV a little bit shy of 5, about 4.9 million. Be interesting to see when all these exchanges come back, like the SIBO and others, how much of that complex paper returns to the S. How much of it has been getting done in SPY out there right now? I mean, some of these other products could have cannibalized a lot of that paper. SPY remaining robust on the options front. The S, not so much, about 676,000 contracts. The ADV ticking up a little bit out there. It's up to about 1.1 million now. It was threatening to break 1 million for a little while there, so I guess that's decent, but from an S historical perspective, not so much. The Q's 403,000 contracts. The ADV 825 out there right now, and the IWM at about 464. The ADV closing in on 650 out there. So IWM has been volatile of late. If you've been listening to TWIFO, Russell 2000 leading the volatility usually to the upside and the downside any given week. Let's get out to the most active out there, the single names where you guys are actually plying your wares today. And it's another surprisingly active day on the single name front. Usually cost you $1.10, $1.15, maybe a busy day, $1.50 to break into the top 10. Today it cost you $2.50 to break into the top 10. So it's surprisingly active out there in the single names. That gets you all the way to Wells Fargo at exactly 250,000 contracts. Number 9 is good old Hexo, ticker symbol HEXO. Trading about, a whopping $1.12 today. But that's not enough to stop them from breaking into the top 10 here. Over 250,000 contracts. 256 to be precise out there. Then we get to number 8, a name probably more of you have heard of. This is Ford at about 295,000 contracts. Ford has been on a little bit of a rebound of late. Let's see out there, 756 right now, so well off the lows when it was in the 4 handle not too long ago. Up about 21 cents or about 3% today. Good for about 295,000 contracts as well. Number 7, getting back into the airlines. American Airlines, 315,000. So already at number 7, already over 300,000 contracts. So that's a robust day. Number 6, good old Apple. Once again, these names getting pushed from the high, probably why we're seeing the Dow leading the dance and the NASDAQ not so much, because these big tech names getting pushed aside by some of these old school names. Apple at number 6, 317,000 contracts. Number 5, Tesla. Once again, kind of a repeat of last week. 335,000 contracts, number 5, Tesla. Number 4, Hertz. 337,000 contracts out there. Let's see what's going on out there in Hertz. Obviously, aside from the headline making bankruptcy, they're at 475, up 218 or 84%. Good grief. Quite the day. The stock is now, they're saying, erased all post-bankruptcy losses. Wow. So I guess all is right with the world of Hertz again? That's crazy town. Last I heard, they had to liquidate a good chunk of their fleet and were facing massive losses as a result. But apparently, all is right with the world again. Stock at 476, up about 220 out there today. 337,000 contracts on the tape as well. Number 3, Bank of America, 360,000 contracts. Number 2, GE, again, old world economy coming back, 432,000. That means our friends across the street taking the number 1 spot, Boeing, 457,000 contracts. You'll know the world is truly reopened again when Boeing reopens their delicious cafeteria downstairs. Maybe also with the return of their live music Wednesdays with the barbecue. That'll be fun too. Not quite there yet, listeners. So a pretty active day. Tesla and Apple, a distant afterthought in the rearview mirror of old school names like Boeing and GE and Hertz. That's the last time we saw Hertz on the top. I need to dig a little more into what's cooking out there in Hertz land. If you want to dig some more into earnings, there still are some more popping off this week, even though the season pretty much drawing to a close. This week, Tuesday, AMC, they're making some headlines of late, putting out that warning that no stockholder wants to see, that they have questions about whether they could continue as a going concern. Not surprising, perhaps, given what we've seen out there on the coronavirus front. Who really wants to go back to a crowded movie theater again? AMC obviously feeling that. And even if they do open, they have to obviously do reduced seating and everything else like that, so nowhere near capacity when they're coming into their big season, the summer movie season. Obviously not a good one for them. GameStop, also one people have been circling the death knell for some time. This is the one I know Mr. Meatball was pretty bearish on of late. Let's see how they're faring of late. 470 for them, up 13.5% today, or 56 cents. So GameStop apparently feeling the love. Let's see how they've rebounded over the low. They sold off in the madness down to, actually not in March, but in April. They got down to about 257 or so. And now well north of that at 470. So perhaps the death knell not ringing, at least not right now, for GameStop. It got caught up in all the love out there. Five Below, Chewy, and that's a bunch of retail names on Tuesday. Wednesday, more of those, Guess, Chico's, and Red Robin, the burger chain. I thought they also were having problems as well. And then Thursday, the Children's Place. They have the overpriced children's items. Hexo, Wiley Publishing, and Hexo, our old friends from earlier, number 9 in the top 10 out there. And Lululemon, they have the sheer see-through yoga wear. And Dave & Buster's, another name that's been talking about perhaps having potential problems as a result of this pandemic. And Friday, Party City, where everyone goes to buy their balloons. And meanwhile, we have to all keep going as well, right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. Let's kick things off. Mr. Rock Lobster, I will give you a rare moment of choice here to start the segment here. Do you want to kick things off by unleashing our Eye of Sauron, see what's out there, or should we go back in the Wayback Machine? Where should we begin, sir?
You know what? Why don't we try something nostalgic? Let's go back in the Wayback Machine for a moment.
Put your Wayback pants on. Put those 70s bell bottoms rear end to break out these days. Put them back on, even though we don't have to go back that far. I think you just like to wear them nonetheless. You have to go back all the way, in this case, Mr. Rock Lobster, to April. To April 27th, to be precise, on the program. Back when we reviewed a name you used to love. You used to be a big proponent of this one. I think it was you and perhaps old Mr. Grigas back in the old school days when OX was on the show. We're big fans of this name, Zynga. They were dominating the mobile space. All the names and all the games everyone was playing out there was coming at the hands of Zynga. Everyone loved them. Then they kind of fell off the radar a little bit, had some issues, And then they have made some acquisitions that were maybe dubious. All sorts of other things have unfolded in the intervening years out here. Fast forward to April 27th, when we profiled this name on the show. ZNGA at the time, listeners, was trading at $7.74. And we profiled someone coming in and gobbling up 10,342 of the May 7.5 calls for a whopping 64 cents. So they needed this bad boy to run north of the 8 handle. And let's see, that wasn't enough, though, on that day. Total of 25,000 traded that day. This was pre-earnings. Earnings were coming in a little over a week later. About May 6th was the earnings date. So someone was feeling a lot of upside love on this one. So like I said, the stock closed after this trade, $7.74. And it seemed like, Mr. Rock Lobster, this one mostly, I say mostly, not entirely, but mostly worked out. Because the stock closed on expiration north of the 8 handle. Not quite exactly as far as this guy needed, but he got what he wanted nonetheless. It got to 8.04, so he got pretty close. He got within a dime of his break even on this one. And yet the weird thing, Mr. Rock Lobster, is that this guy never really took his money and got the heck out of Dodge. So it sounds like he wanted to get himself some stock. Because that sounds like that's pretty much exactly what happened. On expiration day, there were still 22,000 of these May 7.5s open and not a ton traded. So it seems like our friend bought himself some stock for around the price of $8.14 when all was said and done out here. Kind of a bit of a weird one. We don't usually see people loading up for the fences ahead of earnings and then having it kind of, because when you have these kind of big swings of the bat, listeners, you need the stock to really pop in your favor. And it moved their way, but it didn't really pop. Like we said, it closed at that level at April 27th. Then it actually drifted lower. On May 1st, it was trading 7.25. So he was kind of wearing it on these for a while. The stock didn't really pop until, it popped recently. It's trading at $9 now. So this guy missed his window there. It popped on May 28th after his expiration. So that gets us back to our whole timing and expiration cycle thing here in options. That's why options are so challenging sometimes, the listeners. But yeah, this guy had it work out, and it kind of it was slowly drifted up to his level by the time the expiration rolled around. It was right about there, but it wasn't the fast pop you need to have. Still, kind of weird, Mr. Rock Lobster. What are your thoughts on our friend loading up on a bunch of pre-earnings calls, then apparently taking the stock?
I guess they wanted their million shares, right? That's kind of what it looks like. They just, okay, we want our million shares, and we'll see how it goes. So that's the only thing I can think of. They wanted the leverage. Maybe they get a quick pop. Let's see, where is ZNGA right now? My gosh, I haven't looked at that name in years. Ever since they decided not to be an online gambling company, I'm like, oh my God, you guys are crazy. And it appears that they were actually rewarded when you look at it. I mean, it's stock traded up almost $10.
If you factor in holding the stock, the guy's done all right.
So I mean, that part's good. It's just, I remember seeing. You remember seeing customers trying to just buy a lot of stock and just going for the short-term leverage for any kind of big pop and then take delivery at some point. So apparently they still do it. Who knew?
Who knew indeed? Since we're going back to April 27th, let's finish off that day as well. We had a twofer of names to watch on that show. The second was a similar trade, not perhaps the same size, and another obscure name, this time in YNDX, ticker symbol YNDX. We've mocked this one before because their description is just Internet Services Company out of Moscow, Russia, where you get all of your best Internet Services companies out here. At the time, ticker symbol YNDX, of course, listener. I won't tell you where it's trading right now. We'll get to that in a minute. But at the time, April 27th, we saw a block of nearly 2,000 of the May 38 calls going up, paper lifting the offer for, what was the price? $1.10 out there. I was literally lifting the offer out. This was pre-earnings as well. The earnings were the very next day. A total of about 4,500 of these calls traded on the day as well. Some of that could be other earnings-related paper, but total nearly 5,000 trading on the day. The stock closing shy of that handle. Stock closed at $36.96 on the 27th of April. And this is another one, kind of a similar theme, Mr. Rock Lobster, where this trade seemed to mostly, I say mostly again, because he didn't get all the love he needed, but he got most of it. He paid $1.10 for it. So obviously he needed the stock to run to $39.10 for those of you who love expiration graphs on your options here, and it worked out mostly. It got up to about 38.99, so got close to there, similar to the other trade. Weird how that worked out the same day, very similar trades and similar payout profiles. And also, in a similar perspective, it seems like our friend here didn't really take these off. There were about 4,000 still open on expiration day. So another one, Mr. Rock Lobster. It seems like somebody decided to take the stock because these bad boys were traded going into earnings and still open on expiration. And right now, YNDX at 42. So I guess we're 2 for 2. I guess both of our guys here were savvy not to dump the calls and indeed to take the stock because they are several handles to the good. Would you concur, Mr. Rock Lobster?
They are. And I always think of this YNDX as like, one of those Russian companies in like Alias. You remember the TV show in like the early 2000s with Jennifer Garner? Like, just a Russian internet company. I always think of this company like that. Just some part of the alliance. Reaching back into the vault.
But implying that a Russian internet services company is shady, sir.
Yeah, who knows? We have. I guess we're still there dealing with Wu-Wei and all Huawei. I can never pronounce it right, but all these foreign big technology companies. But YNDX has been around for a while, 15 or 20 years or something. So I always thought of this as like the Russian Google or the Russian Yahoo before it got taken over or something. But hey, it looks like they made some money. They wanted to get long, and they ran it through the mill, and it looks like they're at money. So it could work if you hold on to something long enough.
That's the lesson I want people to take away from this show today, listeners. Just buy a bunch of upside calls and just hold on to them for dear life. And when they go your way, just take the stock and keep holding. And in this market, at least, seems to work. So there you go. 2 of our names from April 27th, 2 winners. And if you factor in post-trade appreciation on the stock, pretty decent winners out there. So there you go. Let's fast forward to today. Let's see what our Eye of Sauron has in store for us today. We have unleashed him, and he brought us back this little treat, wagging his tail, ever so excited. He went out to Cardinal Health today, listeners. Ticker symbol CAH. That name today trading $58.92. Another one's had a topsy-turvy year. A year ago, it was trading $44.64. Then it kind of bounced around quite a bit, but the trend was upward and net all the way up to about 60.5. Guess when? Mid-February, listeners. Then we all know what happened after that. Well, bam. Got trucked down to 39.05 intraday. Closed at around 41 on March 23rd. And then, as everything else, it proceeded with the aggressive rebound to the point where it is right now. 58.89. Up another $1.62 today, or about nearly 3%. So Cardinal Health just feeling it out there today. Let's see what our Eye of Sauron found out here for us. It was July upside call love. So someone, Mr. Rock Lobster, thinking this party ain't over yet in Cardinal Health to the tune of 4,868 of these bad boys getting gobbled up. He said, what's that offer? I'll take them all for $1.45 out there. These were opening over there on the Amex. So, yeah, let's see. Earnings are in August. So this is not an earnings play out here, listeners. Mr. Rock Lobster, this is an interesting one. The stock's already had a big run, and someone's saying, you know what? The best is yet to come for Cardinal Health to the tune of about 5,000 of the July 60 calls for $1.45. What say you, Mr. Rock Lobster?
Not an unreasonable. I'm trying to think here as if this is one is kind of a ripe for a potential takeover maybe, or how the healthcare industry looks after all of this. I mean, these stocks have gone on such a crazy. I'm looking at 1, 2, 3, 4, 10 straight white candles for Cardinal Health in the last 10 trading days. So that is quite something. And it's trading up after earnings. Like it had an earnings day, not so good. Stock traded down like $10, and it's already back up way above the earnings spot, which to me smells like a little kind of takeover paper. I don't know. Maybe the big players looking for a smaller fish, but it was riding a wave into earnings, and now it's trading at a pandemic high. It's actually almost back to its all-time high. So I guess the healthcare industry is not going anywhere. So a huge recovery play in this one. So the way this is priced, though, they're looking for all-time highs or at least one-year highs in Cardinal Health, which, hey, what the heck, Everybody's in a good mood. The SPX is going to be up another 1% today, so what the heck? Let's go for it.
What the heck, indeed. Who are we to mock such things? Every other name we've talked about so far today has blown the doors off, so we're going to put this one back in the to-be-watched category. So we take two out, listeners. We replace it with one. We'll come back to our calls in a little bit. Meanwhile, it's Monday. It is time to unleash the uncleest of mics. Yes, it is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, you guys know the drill. Monday, Uncle Mike time. Uncle Mike, sir, what have you in store for us today?
I want to talk about the importance of keeping your rules in trading. And I want to read a little, an excerpt from a book, Reminiscences of a Stock Operator. This is a book written many years ago. It was about, for the most part, it was about Jesse Livermore, or was about Jesse Livermore. Kind of doesn't say that, but it's kind of based on him. And so he talks about his trading, and this was done roughly 100 years ago. And Jesse Livermore is arguably one of the best traders of all time. Now, he had some problems off the trading floor, so to speak, with his life, and things didn't always end well for him. But I'd highly recommend reading this book, in that it's something to where if you want to just kind of get a feel of what it's like to trade, you will relate to it as a trader if you have not already. And so I just want to kind of remind everybody of one of his key rules, and that of keeping his discipline. So I want to read a couple pages out of this for the strategy block today. So to give you an idea of it, and this is before options were a thing, Jesse Livermore, he blew out a couple times. So, but with it, ultimately, he made millions and millions of dollars over 100 years ago. So just to put that in perspective, that would be a lot more today. And so this was after one of the times in which he had blown out, and someone had given him money to trade for them, and this was his opportunity to get back in the game. And so he called it his stake. He needed to get a stake, so to speak. And so I'm going to pick up to where it reads to where he's in a certain spot to where he has a little bit of money, but he needs to make it a large amount of money, and he knows how he can do it, but he can't take any chances. He needs to really go for the AAA trade. So here we go. I think I've told you that it has been my experience whenever a stock crosses 100, 200, or 300 for the first time, it nearly always keeps going up for 30 to 50 points, and after 300, faster than after 100 or 200. One of my first problems was in Anaconda, which I bought when it crossed 200 and sold a day later at 260. My practice of buying a stock just after it crossed par dated back to my early bucket shop days. It is an old trading principle. You can imagine how keen I was to get back to trading on my old scale. I had never been so eager to begin that I could not think of anything else. But I held myself at leash. I saw Bethlehem Steel climb every day higher and higher, and I was sure it would. And yet there I was, checking my impulse to run over to Williamson and Brown's office to buy 500 shares. I knew I simply had to make my initial operation nearly as cinch as humanly possible. Every point that stock went up meant $500 I had not made. The first 10 points advance meant that I could have been able to pyramid, and instead of 500 shares, I might now be carrying 1,000 shares. That would be earning me $1,000 a point. But I sat tight, instead of listening to my loudmouth hopes or to my clamorous beliefs. I headed only to the level voice of my experience and the counsel of common sense. Once I got a decent stake together, I could afford to take chances. But without a stake, which I did not have, taking chances, even slight chances, was a luxury utterly beyond my reach. 6 weeks of patience, but in the end, a victory for common sense over greed and hope. I really began to waver and sweat blood when the stock got up to 90, thinking of what I had not made by not buying when I was so bullish. When it got to 98, I said to myself, Bethlehem is going through 100, and when it does, the roof is going to blow off. The tape said the same thing, more than plainly. In fact, it used a megaphone. I tell you, I saw 100 on the tape when the ticker was only printing 98. And I knew I wasn't the voice of I knew that this wasn't the voice of my hope or the sight of my desire, but the assertion of my tape reading instinct. So I said to myself, I can't wait till it goes through 100. I have to get it now, as it is going through par. So I rushed to Williamson and Brown's office and put in an order to buy 500 shares of Bethlehem Steel. The market was at 98. I got 500 shares at 98 to 99. After that, she shot right up and closed that night, I think, at 114 or 115. I bought 500 more shares. The next day, Bethlehem Steel was at 145. I had my stake, but I earned it. Those 6 weeks of waiting for the right moment were the most strenuous and wearing 6 weeks I had ever put in. But it paid me, for I now had enough capital to trade in fair-sized lots. I never would have got anywhere just on 500 shares of stock. So what that is that even though you are not able to trade, it's important to stay and do the AAA trades when you need to do that. So, for example, what I've really tried to do these last few weeks in this market is stay out of the market. It's not my game. I can't do it. When the market's going straight down, guys like me don't do so well. So I stay out. So what I encourage you today for the strategy block is something that we can never emphasize enough on this show, and that is continue to follow your rules. The best traders do it, and that's how the best traders stay in the game. Well
said, sir. Now let's see if you guys have some well-said thoughts up your sleeve. It is time for a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the program where we break down what you guys have on the brain out there. I love the epic questions. Remember last show, Mr. Rock Lobster, Uncle Mike, we answered a question from Pete from Germany, and we asked him for a little bit more information. He followed up. First off, he said, thank you. I'm laughing so hard I knocked my stuff off the desk. There we go. He says, now I'm world famous with a mail that was read on, I like how he rechristens it, because he keeps writing WW. He says, the worldwide option block. So I like that name. We may have to rechristen the show the worldwide option block after this. So yes, you're welcome, Pete. We love all of our international listeners. Keep those questions coming. He did chime in. He said he is using IB for about 20 plus years. And that's where he encountered his issue. But then he did send a couple of follow-ups to his follow-up. I'll summarize some of these. He says, sorry, it's me again. I'm kicking myself this time. Pete from Germany here. He said, listening to the worldwide OB96 again, and much more carefully this time. He said, I was finally enlightened by Mr. Rock Lobster with his simple RTFM, as in read the freaking manual. I said, okay, I looked up the documentation at the OCC, and voila, there it was. Document 46961, adjusted United States Oil Fund LP, cash in lieu of settlement, adjusted option symbol, etc., and so on and so forth. In short, this document says that at expiration, I'll get 12 USO shares for a strike price of 2.5 and a cash portion of 818 that was fixed for the remaining 0.5 USO shares, and thus won't change until expiration for each of my old contracts. The fixed half USO share cash portion of this construct seems to explain the difference in pricing, because it won't participate in any up or down move with USO stock. Thanks again, and have a nice weekend. And then he followed up his follow-up again. He said, he says, my apologies to Mr. Giovinazzi. Of course, he was directing me very politely to the archives of the OCC, and not as rude as I simplified in my last email. Best regards. And keep up the great work. So a lot of nuggets in here. First off, thank you, Pete. Secondly, the worldwide option block. I like it. Might have to rechristen the show. Welcome to the worldwide option block. Because it is quite literally, it does go all over the globe. And we do see you guys coming in. So good to hear from you from Germany. If you're from other parts of the globe, hit us up. Let us know what you're thinking in your neck of the woods. And Mr. Rock Lobster, I do have to take some umbrage with this myself, because I have I have acknowledged and admonished our audience many times. My first go-to is I say, if you guys have any questions about how this stuff works, about contract specs, the first place to go is to OCC, and they will clarify it for you. Yet for some reason, our friend here, Pete from Germany, decides to heap all the praise upon you, sir, for this advice. So, Mr. Rock Lobster, what do you have to say here for Pete from Germany, who clearly is a big fan of yours, sir?
You know what? It just goes to the wisdom, because since he knows you will take all the credit anyway, eventually he is throwing it at me early on, and where I might get some praise heaped upon myself. So they rarely are able to get around the benign dictator of this great network, but he somehow managed to get it in there. So thank you, Pete from Germany. I appreciate it very much.
The Mutual Love Society of the Rock Lobster and Pete from Germany here. I'm going to have to ban Pete from the network for a little bit. He did christen the name. I like it. Worldwide Option Blocks. I may have to give him a pass for that one. But yes, if you have questions about contract specs, listeners, OCC is the first place you need to go. Type in your symbol. Chances are there's a circular that explains all of it. I have said that once or twice over the course of this outbreak and pandemic, where many of you have had questions about contract specs of late. Another repeat offender here. This name sounds familiar. Trader J Flaw. Actually, I do believe he wrote in when he spoke last time saying it's not Trader J Flaw, but Trader JF Law. Apparently, he's a lawyer. 79. So there we go. Our producers have corrected me that is the appropriate pronunciation. So Trader JF Law, I believe, 79 wants to know. As you know, with options trading, when it's going your way, it's all sunshine and rainbows. But when it goes against you, it's murder. At what percent down do you cut and run? And does the percent change if you have 4 to 6 months of time left compared to the front one? This gets to what we were talking about before. In fact, what Uncle Mike was just literally quite saying about having those rules and adhering to them. So when you're putting these trades on at the outset, you have to kind of do this math in your head where if I'm off this percent, I need to kind of live to fight another day. And if I'm up this percent, I'll probably cut it. Unless my outlook has changed, then perhaps I'll give myself a little bit more room to run, take half off, something along those lines. But you need to have these established at the outset. And as Uncle Mike just said, got to kind of stick to them. Mr. Uncle Mike, sir, Trader JF Law wants to know at what percent down A do you cut and run? But more importantly, kind of tied into what you were just talking about, he wants to know, does your percent change if you have longer time horizon left in the options versus if it's about to expire in the front one?
The only time that my percent would change is if I'm holding a stock and buy and hold. So in other words, there were some stocks that I held on to through this downturn, which I'm thankful I did for myself and for clients. But that's kind of something different. I think the two rules that I would really emphasize when doing this is know your exit before your entrance. So in other words, when the bullets are flying and you're on the front lines, it's very difficult to think clearly. But if you have a plan going into it, then as soon as you lose this much, you get out. Or as soon as you make this much, you get out. So think of it kind of like a pilot in that if one of the engines fails, they have a plan. It's very procedural. They know what to do. Because otherwise, let's be honest, if there was not a set procedure for it, if I'm up there and I'm having engine troubles at 30,000 feet, I'm going to get a little bit scared and I might not think properly. But because pilots are so well trained, excuse me, they have procedures to where they know what to do. The same with doctors and surgery. If their blood pressure starts dropping, they know that if this happens, they do this. And they're very unemotional when doing it because they have to follow procedures. And as a trader, I think you really need to be the same way. Second thing that I'd like to emphasize is that a good general rule is that I don't like to risk more than I'm trying to make. So in other words, let's say that whether it's 4 or 6 months out, whether it's 1 day out, if I'm looking to make $100 on a trade, whenever the trade itself is down $100, I think it's important to get out. Now, there are exceptions to that, of course, but typically I like to start with that. That way you know that if you're right more than you're wrong, then you mathematically have to be profitable. Unless you have gap downs or something like that. But if you lose the same amount as you make and you're loyal to that, if you keep using the same amount of capital every time, then you know that you'll be profitable if you're right more than you're wrong. Now, of course, there's other ways with which to look at that, and other ways to set up a system, but ultimately, I think that's what's important. Now, there are times to where I'll say, okay, I'm just going to buy this call option. What's my risk management for it? I am going to do absolutely nothing to the downside. You might say, but Uncle Mike, how can you say such a horrible, evil thing? I would say, well, I didn't really put that big of a position on in the first place, so if I lose everything, everything isn't very much. So those are just some general guidelines as to what I would use when coming up with risk management techniques.
Well said, Uncle Mike. The analogy I often throw out there, it's a silly one, but it's apropos when I see his question about time left to go is, back in the days when people used to go to Vegas, I guess that's starting up again, but back in the days when that used to be a thing, you go in there for 3 days and you sit down at the table, it could be craps, could be poker, whatever your game of choice is, and you win like 10 grand in like the first game. That's almost a bad thing because you have 3 more days. You're just going to give it back. You kind of want to have more of a bit of an ebb and flow over that. And it's kind of analogous on that trade. Obviously, hopefully you're doing better than just gambling with your trading, but it's hard sometimes. I can see what you're saying. Mentally, I still have 4 months. or 6 months on this option. I can't cut it loose now. But that's the way you have to think about these things. You have to apply the rules regardless of whether you have a month, a day, a week to go on these options. And, of course, as we said many times, when you're putting these on, have something in place for when you're going to take it off. Otherwise, you're kind of just making it up on the fly. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block portion of the show. We tell you what we're watching for the rest of this week. And as Mr. Rock Lobster alluded to earlier in the show, this rally has just increased as we've gone on through the show. We're up about 0.5% coming into the start of the show. S&P up about almost 0.75% now. Dow up over 1%, 1.1%. And the NASDAQ up 0.2%. So NASDAQ catching up to the S&P, whereas before it was kind of languishing behind it. So apparently the optimism is spreading out there. Mr. Rock Lobster, we'll start with you, sir. What are you watching for the rest of this week until we gather here together on Thursday?
I hate to, 3,300, it's only 84 points away. So my big curiosity right now is 4-month, let's say longer term vol futures are about their low level for we've had in this since the coronavirus came around. And I'm just looking to see if, for all those watching, I think, long-term vol, clearly the election is now in the balance. I think much more protests and all these other things. So, but I am seeing that vol, it's going down a little bit, but it really hasn't broken through and made any kind of new lows. So the vol covering the election still really hasn't come in. It's not that it's high as it was when everything was going crazy a couple months ago, but it has not been able to get past a low point for the cycle, for this event cycle. And I think that's kind of telling. So it's sort of hanging there. The biggest industry now is oil. Look at all your Main Street stocks. Mark has kind of been beating the drum about this one for, 6 or 7 weeks. It's done very well for Option Pit subscribers. And, all of a sudden now, like Exxon was a $35 stock, now is a $55 stock. So oil and all these things are moving like crazy. So anyway, that's what I'm looking at. Main Street. Main Street
USA. Mr. Uncle Mike, same question for you, sir. Some might argue St. Charles is Main Street USA. What's on your radar out there today, sir?
My office happens to be on Main Street, 303 East Main, as I'm looking out my window right now. Very good thing to know. But no, I am watching to see if we can close above the 2019 close today. I think we can. We were above it for a moment on SPY actually a few minutes ago, but curious to see if we can do that. Markets will be positive on the year. If that happens, factoring in a global pandemic, riots in the streets, everything that's going on. And so that would be something. So I think if we can do that, then that's a big deal in this market at this point in time. So I am very focused on that right now.
They can do that, then Uncle Mike can come back to play. Markets are positive. He'll be back in action all sorts of good stuff. Unfortunately, that music, listeners, means we're done with the good stuff, at least on this show for right now. We'll be back in a little bit to talk all things craziness going on in the world of crypto, the vol, the volume, the skew, the unusual activity, all of that good stuff. And some little fun stuff in between there as well if you listen in live. I'm putting up some fun extra credit live streams outside of our broadcast hours as well. You guys seem like you're enjoying those as well, so maybe we'll put some more of that out there as well. Keep you guys engaged. We know everyone needs something to listen to. If for some reason you're not checking out the podcasts, we can put them out on a live stream there for you as well. Keep you guys engaged as we go back around the horn. Let's start with the Uncle List of Mikes. Mr. Uncle Mike, sir, if folks are intrigued, they want to talk to you about setting rules for trades or just have someone watching over their portfolio in these very, very crazy times, where should they go? What should they do?
Give me a call directly, 630-885-0017, or go to stcharleswealth.com. I would love to work with any option block listeners. I've always had great relationships with clients who were option block listeners first, and feel free to reach out to me. Would love to have a conversation.
Maybe our friend from Germany can hit you up. I'm not sure how you work with internationally domiciled clients, but hit them up. Maybe you can find out for yourselves. And let's head on around the horn there to the land of Maine. Mr. Rock Lobster, sir, you got the Legion, you got the Vol Trading Club, you've got your Sweet Paper Airplanes Club. If folks want to learn more about all this good stuff and more, where should they go? What should they do?
Go to optionpit.com. You can sign up for our Vol Edge product, our Sharp Bets product, our Trading Legion. All these things are going very, very well, helping people sort of sidestep this huge pothole we ran into in March and April. Check all that stuff up, or the Vol Trading Club. If you want weekly Vol mentoring, pop on in and check it out.
Check it out. Indeed, optionpit.com is the place to go. And on behalf of the Option Pit crew, a.k.a. the Rock Lobster and the Greasy Meatball, and, of course, the Uncle List of Mikes and our friends over there at TradeStation Land, tradestation.com/optionsinsider to learn more. Thank you all for listening, for sending in such great questions from all across the globe here on this fun worldwide edition of the Option Block. They're all worldwide, but just encapsulating it for now. If you need more, like I said, we'll be back in a little bit. Otherwise, we'll see you back here, I think, tomorrow for a little bit of fun boot camp. If you want boot camp live, you got to get it tomorrow. Otherwise, you got to wait for it to go hit the network, and it'll probably be a week or two in between. So if you want it live, join us on the live stream. Me and the black-hatted one and a few others there tomorrow breaking it all down for you. Got, of course, OPR and all that other fun stuff on Wednesday, and then we're back again on Thursday for more of the Option Block.
The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.